We start off with a big-time market comeback in the last hour of trading. The Nasdaq surging 330 points from its lows of the day to close out more than 1.6% higher. That is its best start to a month since April of last year. The S&P and Dow also finishing solidly higher. The move coming after, or as, the 10-year Treasury yield topped 3% for the first time since 2018, the 30-year at its highest since 2019. So, have markets found their bottom? What do you think, Tim?
Well, no, I don't think they've found their bottom, but I think they've found extremely oversold levels. And if you look at the day that we came in off of a horrendous April. Everybody knows those stats. And so you actually came out of the gates. Yeah, the S&P was up about 50 handles. Then intraday, we went down 2%. We went down over 100 handles on the S&P before finding some place of optimism in the midst of all this. I think we're waiting on the Fed. I think we're waiting on more earnings. But ultimately, the dynamic around where companies are going to be operating in this market out 2-3 quarters, I think, is what equities are doing now. We're also waiting for some of those mega cap tech stocks shoes to drop. I think we're waiting on Apple. I think we're waiting on Microsoft. But right now, we're waiting and we're focused on the Fed on a day when that 10-year got above 3%. And people should be concerned about that.
Dan, what do you think?
Yeah, so the last Fed meeting in March when the Fed raised 25 basis points, we kind of made a bottom right before that, and we kind of rallied out of it. I think it all went a bit further than a lot of people would have thought, certainly than I thought. And so maybe that's a similar sort of action. This has been very well telegraphed. Go back a few weeks when we had Jerome Powell, Fed Chair Powell, on the Hill, right, and basically gave 100% certainty they're going to raise 50 basis points, and he sounded pretty hawkish. And what did we have? Well, we had a stock market that careened lower. I think the S&P closed down 9% in April. So to Tim's point, we saw it all the readings, AAII, put call. I mean, it went on and on and on. This morning, you had that miss of the ISM. We had GDP last week. There's a lot of bad news near term in the stock. And when's the last time we can remember nearly the S&P down 10% where nothing's going on other than the Fed? I mean, there's a lot going on.
And with the Fed hiking into all that,
that's right.
too.
That's kind of my point here. So, yeah, we're a little oversold. We're at a level. We almost got to a new 52-week low. That would have been maybe a little bell ring for a move back towards 4,400 in the S&P.
I don't know, 40-50 had always been a level in the S&P 500 that a lot of technicians pointed to in terms of being, support. So, Jeff Mills, I say I'll flip what Dan had to say on its head in some respects, in that we had all this bad news. We have the Fed. We know they're going to do 50. We had bond yields popping, and yet we still managed to stage this bounce. I would say that's bad news, good price action, and therefore that's actually good news for the markets. No?
Well, I don't know. I'd like to see a little bit more follow through, quite honestly, to really, put a pin in this as the bottom. I think that there's plenty to point to. I keep pointing to credit. So let's look at what credit did today in the high yield space. HYG was basically flat. J&K was down. So I would say you saw further deterioration in credit even as the equity markets were able to rally. So I keep saying beware of equity rallies if credit does not follow. I think more or less that's what we saw today. Apple didn't make me feel great. Amazon didn't make me feel great. We did this analysis with Microsoft maybe a week or so ago. But a stock like Apple, it looks to be breaking down technically. And from a valuation standpoint, even if it retraces halfway back to its average PE multiple, that would take it to about 20 times. It probably deserves a little bit of a premium given what's going on with services. But that's 16% down if you were to see a move like that. So there is still room to come out of these names. And I talked about this Friday as well, and I'll just end with this. Look at how Amazon did today, and then look at how Facebook did today. There is a difference in these stocks that have re-rated and stocks that have not re-rated. And I think the stocks that haven't re-rated are still going to pull the overall market lower over the coming weeks and potentially months.
Pete, do you feel the same way, that there are pockets of the market that have re-rated? And I guess I'm thinking of names like an ARC, for instance, and the Northman Trader, who we all follow the Northman Trader on Twitter. He pointed out the ARC, and on a day when the markets hit new lows, ARC did not, and it seemed to have some support there. And I'm wondering if you think that maybe, there are pockets like these innovation names that have found some footing.
Mm-hmm. Yeah, I think some of them, Mel. I don't know about all of them, and I know we've got lists all over the place for tonight. But, yeah, I especially when I'm looking at big cap tech, I think a lot of those names actually really stand out for me. The way they did turn and burn. These guys are all mentioning the turns that we'd seen out of names like Facebook and Amazon and Apple and Microsoft and all of those big cap names. And when they start to move, Mel, there seems to be a huge rush. And it's not just for those names. It looked like, to me, like they were picking up the entire market. As a matter of fact, at the bottom of 3 o'clock, as we were going to the final hour of trade, We had a huge buyer in the S&P 500, as a matter of fact, the SPYs. We had some huge call buying in there, 17,000 of the upside August calls, and it immediately flipped, and we started to see that move. And a lot of that was the big cap techs and a lot of those names that do fall under, whether or not they're in the Dow or obviously in the NASDAQ, or in some cases, obviously affecting what's going on in the S&P. But it's been really, really interesting to watch, and we had some good volumes today. You know, April was a terrible volume month for the options world, and now all of a sudden we start off this month over 40 million right out of the gate. So I think there's a lot of different factors here, including the charts. A lot of people talking about that all day long. We hit certain levels, and then we bounced off those levels. Is it healthy? We'll have to see. This is just 1 hour. It's not even the full day. It was 1 hour of trading. So we'll actually find out a lot more as we progress through this week.